Welcome back to our channel, where we delve into the exciting world of technology and finance. Today, we're diving into a topic that's reshaping the lending industry, AI-driven credit scoring. Buckle up as we explore how artificial intelligence is revolutionizing the way loans are approved and how it's benefiting both lenders and borrowers. Hey there, tech enthusiasts. I'm thrilled to take you on this journey through the world of AI-powered lending. As the financial landscape evolves, traditional credit scoring methods are being challenged by cutting-edge algorithms and data-driven insights. Let's get started. 1. The evolution of credit scoring. To understand the revolutionary impact of AI in credit scoring, let's rewind a bit. We've come a long way from manual credit assessments. From the early days of simple scoring models to more complex FICO scores, it's clear that the process was ripe for innovation. Traditional credit scoring relied heavily on limited data points like payment history and outstanding debts. This often left out crucial information about a borrower's true creditworthiness. 2. The power of AI in credit scoring. Enter AI. Artificial intelligence is changing the game by crunching vast amounts of data in seconds. Machine learning algorithms analyze not only financial data but also alternative data sources like social media activity, online behavior, and even education records. This holistic approach provides a more accurate and comprehensive view of a borrower's financial behavior, reducing the risk of biased decisions and increasing approval rates for those who may have been overlooked by traditional methods. 3. Benefits for lenders. Lenders are reaping the benefits of AI-driven credit scoring. With faster and more accurate assessments, loan officers can make informed decisions swiftly. This streamlines the lending process, improves efficiency, and reduces overhead costs. Moreover, AI models can predict default risks more accurately, minimizing the chances of bad loans and improving the overall stability of lending institutions. 4. Empowering borrowers. Now, let's talk about the borrowers. AI-driven credit scoring isn't just a boon for lenders, it's also empowering borrowers. People with limited credit history or unconventional financial backgrounds now have a fairer shot at getting loans. User-friendly platforms and mobile apps make it easier for individuals to access their credit profiles, understand their scores, and work towards improving them. This financial literacy aspect is a game changer for many. 5. Addressing concerns. Of course, with great power comes great responsibility. Some are concerned about the potential biases in AI algorithms. It's true that AI models can inadvertently perpetuate biases if not developed and monitored carefully. However, there's a growing emphasis on transparency, fairness, and continuous auditing of these algorithms to mitigate such risks. 6. The future of AI in credit scoring. So, what's on the horizon for AI-driven credit scoring? We're looking at AI evolving to better understand evolving financial behaviors and macroeconomic factors. The future might see even more personalized lending solutions tailored to individual needs. As we wrap up our journey through the realm of AI-driven credit scoring, it's clear that this smarter approach to lending benefits both lenders and borrowers. By harnessing the power of AI, the lending industry is stepping into a more inclusive and accurate future. Thank you for joining us on this exploration of AI-driven credit scoring. If you found this video informative, don't forget to give it a thumbs up, like and subscribe for more insightful content. As always, stay curious and embrace the possibilities that technology brings. Until next time, signing off.